So we stayed in that channel yesterday. We were pretty bearish all day yesterday. We had one little push back up to the top, or back up a little bit. Yesterday, right in here, which is about midday, and then at the end of the day, we sold off again. So kind of what we thought was going to happen, right? Yesterday morning, we had just hit the top of this and moved down. I was talking about this trend line breaking. It broke. I was talking about the bottom of this channel and this structure line would be a good place for it to come down to. We didn't quite get there, but pretty close. You see, we bounced up and we held below that 21. That's where we sold off. Here we just broke above that 21, so expect some higher numbers right through here. We're also back in the Monday range. Being back in this Monday range here, we could possibly see a breakout of this channel to the Monday high, but we do have news right here. So that's what that orange little dotted line is on the screen, is the CPI. Technicals tell me that we're going to break higher, but with news right here, uh, just depends. Yeah. Jump into this move down yesterday. Let's go to the NASDAQ. That's what I was looking at yesterday. And I'll jump into the 5-minute chart because I did watch the Casper ICT video yesterday after we got off, and I was thinking, well, that might be something good for me to be sitting in the classroom, because at 9:35 on regular days, I don't have any students. It's when I have my planning period, and I have planning for about 2 hours, so it's good in the middle of the day. And I thought, well, I'll just jump on and I'll look for that silver bullet. So the silver bullet was, right in this area here. And well, not the silver bullet, but the time frame was right in that consolidation. And I was looking for a breakout, that right there. And we didn't get it. We broke down and then kind of popped back up and then rolled over. And the 5-minute silver bullet was actually this fair value gap right there, which was a little later in there. So it's 10:45, 10:50 on the 5-minute, but it had, obviously silver bullet. It's between 10 and 5. I mean, 10 and 11. So there's the first fair value gap on the 5-minute chart between 10 and 11. And I was looking short right here. It's going to have my stop here. I was on the micros because it was such a large stop. And then I was going to pull it all the way down to 2. And that's basically what I was going to look at. And never got tagged back in. Broke down almost to target and then ended up coming all the way back up and selling. Now, the one thing that a couple of things I didn't like about Casper's ICT thing was one, he said he leaves it open until 4 o'clock. Which, if that was the case, this was a loss, because it comes all the way back up, tags you in, and just continues to run higher and get you for a loss. And then 2, he limits you to just the 5-minute chart. And not that, I mean, some people do need those kind of limitations. But I think yesterday if we go to a 3-minute chart, the first fair value gap between 10 and 11 on a 3-minute chart happened right there. And if you had to put your trade in, as you can see, you would have easily hit that 2-1 for 40 pips. So, and of course, I was thinking yesterday, well, I'll be strict to the 5 minute. It always gives you a fair value gap. But then this time I was very patient. I had time. I was working on things. So it wasn't like I was, being impatient to try and jump in on the trade or anything like that. So, but also during this time on the 5 minute chart, I was still looking bullish. Morning, Fred. Yeah, I was still looking bullish here. And until this candle actually came in, and we didn't break back higher, that's when, I was like, okay, no bias. Good evening, Jenny. Just talking to Kyle about yesterday's silver bullet trade between 10 and 11. So I did watch Casper's video that Chris put in, and obviously, it's a good video. But like I was telling him, I was like, I have two things that I didn't really care for in the video, or two things that I felt like were something that can be tweaked. And one, like I said, is I think it's limiting to it. He limits you to the 5 minute chart. And the reason why I was looking at this, y'all know my school year has started again and whatever. So between 10 and 11, I actually have planning period. So I don't have students at that time. So I've got time to look at the chart. So yesterday, that 5 minutes, the 10 to 11 area was between this and this, right? So I had some time to look at it. And the first fair value gap on the 5 minute chart happened way down here, which is perfectly okay. And I went ahead and set up. Well, I didn't set it up, but was looking at this, and I would have done this on the micros because it was such a big move, and then the 2-to-1 ratio would have been, roughly right there, which never got tagged. And at this point, because it didn't tag me in, I was like, well, he says leave it open until 4. So I was still watching it and everything. It almost kind of went all the way down here and got me in. I went down here and hit my target. And then as it's coming back up, well, I really like this pattern bullish, right? So I went ahead and in my mind, I wasn't going to take this trade short. And if I had have taken this trade short, this would have been a loss, right? Because it would have tagged me in and just kept running all the way up into here. So I felt like, okay, my first, I guess because you don't want to be so robotic in the trading, right? I wouldn't leave this open until 4, especially if price action starts looking like this, right? If price action starts giving me bullish sentiment and we start breaking higher through structure above the 21, put the VWAP out here too. I think the VWAP is up in here. So once we break above that 21, I'm thinking, okay, VWAP's probably going to be the target. So that's my mentality in trading there. So I don't know, leaving it open until 4. I don't know if I could do that as a trader. And I know he's got tests and everything that says it's okay. But if you look at a lot of those trades that he took, they happen pretty quickly. His winners happen pretty quickly. And the losers were the ones that were kind of drawn out. They didn't tag him in early enough. And, but anyways, so however, if you don't limit yourself to the 5 minute chart and you go a 3 minute chart, the first fair value gap after 10 o'clock was right here. Right. There's your first fair value gap on a 3 minute chart. It's pretty quick, pretty small. But if that's where you traded, this is where me and Kyle were just talking. Your stop would have been there, which would have been on this candle. and the 2-to-1 would have been a 40-point runner, basically. And that would have gotten you in, and it would have been a good win. So to me, I don't know if the 1 minute chart would be okay, because I think that's going to be too tight. You probably would have gotten stopped out after this move down. But maybe the 5 and the 3 minute chart could give you a decent little move. And of course, the 3 minute chart obviously did in hindsight. But there was only two fair value gaps, or let's say three fair value gaps in the entire hour on the 3 minute chart. And the first one was here, which resulted in a win. And then the second one was here, and you wouldn't have gotten tagged in down here because you would have went to the first fair value gap, which is by the silver bullet strategy. If you didn't get in, if this didn't happen. So, anyways, this is something that I'll look at again today. So that was just kind of a recap of my thoughts yesterday, because I know I posted in a Discord I was looking bullish here. When price action was like this, I thought this might be a good bounce area. We might continue back up into this structure, maybe even the daily, and then that candle came in and it was like, I don't think so. So let's start just with no bias and look for on a 5 minute chart. Let's start with no bias, and this could possibly be our silver bullet trade to the downside, because even when you're looking and using this strategy, you don't have a bias. You're not looking long or short. You're just looking for the fair value gap, and you're going to play that fair value gap in the direction in which the market has presented it to you. So, and then it just never gave you a fair value gap until that one. And of course, by that time too, we're almost at that structure. I was almost hesitant, and I thought, nope, you know what? We probably still have a lot of downside. I'm going to wait and give it a look. And I mean, we did have a lot of downside, but I think to tweak it a little bit, I think the 3 minute chart is okay for larger moves in which this strategy presents. And then I think you have to watch price action instead of just letting the trade be open. I think you have to watch price action afterwards. You can leave it open as long, however you want. But once we started putting in this type of structure, I was like, nah, I'm not going to keep my trade on. So it ended up being a no trade day, which was fine because, again, I'm not at the charts constantly, but I was at the charts enough because I got kids back at 11. No, it was 12 o'clock is when I got kids back. And it's like a weird transition with the classes and stuff. So I still had some time to kind of watch it. But once I started seeing this break above that structure there, I was like, yeah, we're just going to go ahead and cancel it. So anyways, that was yesterday. One really good move. We zoom out. This is that structure that we were talking about it coming back down into. We go to the ES. This is where we were yesterday morning, bouncing off the top of that channel. That's that trend line we were looking at yesterday morning. Once we broke through it, we were talking about this level down here coming all the way back down to the bottom of the channel. We almost got there. And now we are pushing back up. We did break through that 21. If we end up holding the 21, then, I think we might be able to get close to the median, if not this channel high, before news happens. But we do have CPI today. So honestly, if I'm looking at this, technicals tell me that I know we've got liquidity situated, so it could be have a little trickle. And then technicals tell me that higher prices today, whereas yesterday, I was looking lower. But um, with news, it kind of throws that out the window, especially like CPI and the fact that we were ranging all week, because this is really just a range, and the fact that we're probably we've been ranging, and the dollar has been very quiet. So, I mean, we had this push up on Tuesday morning, um, Monday night, Tuesday morning, because of nothing. I thought the China CPI, that was Tuesday night. So, but we had this push up on Tuesday morning, and um, that's basically just the range. Yesterday we were here. I thought we would just kind of stay in range, and it's kind of what we're doing. So, dollar seems to be kind of falling off a little bit here, but again, news at 7:30. I would just pay attention to the range lines that are here right now. The Monday range, we're situated on the median. Let's throw these two out there. It's 21 of the 50. It doesn't help us right now. We don't really have an opening gap, but we do have these lines down in here just below the Monday low. Let me put this vertical line in at 8:30. And then that's going to show where the news is. I just don't see us having a whole lot of movement in the dollar before that news comes out. You know, no, everybody's still killing it and trading well. So just keep doing that, right? But I do feel, you know, depending on how I'm going to throw the VWAP on here and then just get it all cluttered, so we can look at the London open. All right, to the midnight right here in the London low. I don't know, it's a pretty good structure right there. So see if VWAP holds it. We break through this line. Obviously, we're breaking through some structure down and through here too, and we'll probably be headed down into here. But if we hold that line, then we might just trickle back up until news. Red be gone. There's another trend line, kind of like we had yesterday at the same time. Miss Jenny, how you been? No, it's each account. Nice. Yeah, that's each account. So yeah, each account's 10,000 a piece. Actually, is it just 10,000? Because Apex is usually 25. Did they change it back to 10? Because it was the first 25,000. I haven't heard any differences. Yeah, no, it's you receive 100% of the first $25,000 per account, and then 90% beyond that. Busy with work, haven't traded much at all. Been playing SI last couple of days. SI Silver, Silver futures, nice. Yeah, I've actually got. I have I think the indice on it. No, I've got the future on it. I haven't really looked at it lately in a while, actually. Up in both accounts. The moment evaluation, nice, nice. Just be patient. How much time you got left in them? Yeah. So Kyle, I know the first 3 months, depending on what the PA is, the 20th and the third. So yeah, you should be all right. You got 10 days, roughly 6 days of trading, 6 or 7 days of trading. No, you've got tomorrow and the next 5 days of trading in the one that goes out on the 20th. So you got 6 days left in that one. But the third, you got, 2.5 weeks. So you'll be all right there. But Kyle, yeah, 25,000 per account. And I think the first 3 months, depending on the size of that account, you can take out like a maximum or like a minimum of 1,000 per account. So if you have 5 PA accounts, your first few withdrawals will only be like $1,000. But that's per account. So if your accounts are on a copier, and I think yours are right. If they are, then I mean you can take out 1,000 per account. Oh, look at that. So structure held this up right here, Miss Jenny. This is on silver future, right there perfectly. So we didn't really close below that on the 4 hour. And let me take the VWAP off. I'll leave the 21 on, and then let me take this off. And yesterday before the big drop, missed the big drop. Gotcha. Gotcha right there. Um, be patient with it today. I don't know if I'd be looking bearish again. Because we tapped this structure line, we pushed up, and then we come back down, taking a little bit more liquidity. But look what we held. Like that's a pretty good hold on that line. And, we held here too. Like, we really played with that line pretty good. So I would wait. We'll zoom in a little bit, but on the 4 hour, we're not bearish again until we're really below that. So I understand. And then let's move into the hourly. Yeah, this is pretty bullish. 21, we're back above it. I'm gonna pull the VWAP back in. And we're above when that let's see. Huh. Yeah, there you go. I know exactly how that feels. The first few days of school for me have just been so exhausting. Like you don't realize the mental exhaustion that you have just kind of controlling students, and just trying to get them back into the flow of you know doing work. And just not having anything to do for the whole entire day. And I'm pretty lenient, but I can only imagine like certain teachers who are a much more structured version of me and how they feel. Like I spend like the first 2.5 weeks just goofing off with them and, trying to learn who they are and managing the classroom in that way while throwing a little bit of education at them. Education really don't start till next week for me. So, but that's me. So, um, it's a pretty bullish pattern right here. Yeah, popped up. I don't look at silver all that much though. So I would have thought this was pretty bullish too, and then we rolled back over. Hmm. Yeah, the continuation on this. Oh yeah, well that's good. That's good. Makes it a little easier to break above that. Get a break above that. And then once we kind of break above that, then buy side liquidity here. I got you. So, and this is for, I'm assuming like upperclassmen, like high school. Oh yeah, yeah. The leaving exams. Gotcha. So I guess that would be the equivalent of like ACTs or SATs here in the States. That's kind of our exit exams that help you get into college. They have like end of course and stuff like that, but that's like school based stuff. Higher school certificate. Oh, I got you. Kyle, when are you supposed to be in college? Um, in when are you reporting to campus? Got to be soon, right? Yeah, yeah, Kyle. When are you reporting to Duke? I may do that. My my oldest daughter, she reports. Well, I say reports. She moves in the campus on campus on the 17th. So we got one more week next Thursday, which is it's been transferring to Stanford next year February. Okay, cool, man. You know, whatever. Stanford, I guess is okay. Give yourself some time. Take a little break from classes and things like that. Be an adult for a little bit. I get it. Become like this. super amazing, awesome futures trader in which you don't need education anymore. And you're good to go. Yeah, my daughter, she goes August 17th. So she'll be moving in on campus then, and my wife is tore up, and I'm kind of I'm feeling it just because it's my baby girl. Like I mean, it's my first girl, my oldest girl, but she's my baby girl, so kind of like feels different. Yeah, I don't blame you, man. Stay young, my friend. Looking at this 5 minute chart, we got structure right here in which we're playing with right at this trend line. We got the VWAP just below that, so wouldn't be surprised to see like a drop into that or a wick into that, and then a push. Still have some inefficiency. A nice little order block right here on the 5 minute. But yeah, interacting with this structure right here. That's a 5 minute chart. So I wouldn't put as much stock in that. You go to 15. I know we got it there, but this was not really a lower low before making that higher high. And then we didn't create another low and break lower. So I don't put a lot of stock in this structure right here being something like say this one, right? So if I was going to look at, you know, structure to look for price to come into, it would probably be this dotted line again. And I could even move this dotted line down to like right here, right? Because we pushed up and broke some highs right here. And that's where our buy side liquidity is holding. And then we had that huge drop, which broke below these lows, right? So we soaked up that liquidity. And then we made this move up, lower high, and then a lower low. So right now, this being the lowest low, well, we got a little bit lower right here, but right there, that being kind of a lower low than this is the structure where if price gets down into, I would like to see a consolidation hold before a push back up. And I feel like this structure might be a little more important than say here and there. So, and if that's right at our daily open, below all that liquidity for that. So, might be a good little area. If we were to happen to break and start to go a little bit lower, then that would be the spot in which we could possibly see that consolidation move. But again, news at 8:30. So, going to be watching that. I think that's just kind of where we're going to have to settle right there. So, and just wait on that. I don't know if it'll present us with anything before that. So, trading the NQ today. Go back out to the 15-minute real quick. And yeah, that would probably correlate with the structure line that I've got on the ES, this area right here. So if we do break lower, we interacted with it already beforehand. And this is kind of a similar low. So I think if we were to break back down, this would be it. And then that would give us that classic head and shoulders push if we're going to go bullish. But again, news today is going to be the driver. We do have a pretty nice, take that out and go here. It's not a perfect channel, but make that solid line and clone it. See what it looks like down here. I'd have to go in and look at the bodies of this to really see it, but let me take this one off real quick. And I'm going to fix this one. So this is just a similar channel to what we're looking at on the ES. All right. So it doesn't look like it's going to be perfect by any means. Yeah, I don't like that at all. I'm just going to go right here with it on the bodies. There. So not as quite as a perfect of a channel that's on the ES, but similar, right? And we're right kind of smack in the middle of it. And we have news. Let me put that vertical line here for the news right there. So so at 7:30, maybe we get some type of, see what's the difference between CPI and core CPI. I mean, right off the top of head, I wouldn't be able to tell you. So core CPI excludes food and energy. That's the only thing. So CPI is, consumers, let's see, what is it? Consumer price index. And the regular CPI month over month is just goods and services purchased by consumers. And then core CPI is goods and services purchased by consumers, excluding food and energy. So, like materialistic type of things. Food and energy accounts for a quarter of CPI. They tend to be very volatile and distort the underlying trend. So the Federal Open Market Committee pays more attention to the core data. Yeah, apparently so do traders. So that's what that says. But they all come out at the same time. Everything is released at 8:30. And these numbers are the same, right? But they'll be a little bit skewed. So if we, let's see, which has more core CPI, which is what it says here, core CPI. And I'm assuming like the year over year would have a little bit more weight too. But you also have unemployment claims that's coming out at the same time. So all that's going to hit. And let's see, what were the last few months? CPI has missed the last 2 months and the last 3 out of 5. And then the core CPI only missed last month. So if we go back to, let's say, July 12th and then June 13th, let's go to the daily. And let's see when CPI, let me get these lines off. Let's see when CPI was released. What did the price action look like? I'll leave the 21 on there. That's fine. So June 13th, right there. So really not a big move at all on 13th June. And that's when it said it was released, right? Yeah, June 13th. So not a big move at all. And the core CPI hit expectations and what was forecasted, but the regular, the CPI that's not core actually missed, and we didn't get a big movement. So obviously, core, meeting those expectations seems to have been it. And then last year, last month, July 12th, obviously a bigger candle. This was June 13th. This is June 12th, and let's see if we can't dive into that. We can go back far enough. Yeah, we can. Right here. Yeah, right there. So a pretty good sized candle right there. And July 12th was a miss, but it popped up. So, because it was bad for the dollar, right? So, red numbers are bad for the dollar when they come out. And because it was bad for the dollar, the market jumped when that popped. So, and if we go back to June 13th, at 8:30. So right there. And this again at 8:30, we met expectations on June 13th. So there was a kind of a pop. It wasn't a beat. It was just they met the forecast. So there was a pop and then an immediate drop. So what do? We went sideways. So that's a pretty good explanation of the last couple of months. And then May 10th, we beat it. So let's see if we can see May 10th. Starting to run out of data. May 10th, 8 o'clock, 8:30. There we go. Barely have the data for it, but you can see we beat those expectations. We popped up, and then it looks like we just kind of sold off a little bit. I don't know what it looks like. Like, it's a pretty good candle, though. But really, you know, didn't move all that much. We had this nice pop, and then the open of the market moved it up again, and then we sold back off. And, that's CPI volatility. Gosh, there we go. So obviously, the core CPI means a little bit more, but then you also have the unemployment claims that come out too, and they've been, meeting and beating expectations for the last month. So, and it's a weekly thing, but for the last 5 weeks, we have met or beat the expectations of those unemployment claims for the dollar. So, that probably levels it out, right? So on August 3rd, no. On June 13th, we beat expectations and missed on CPI. So the miss caused the market to jump higher, but then because we beat expectations on unemployment, it kind of leveled off, right? So my suggestion, though, when it comes to the news and playing the CPIs and the big movers like this is let the first move happen. Don't try and predict that move. Just let the first move happen, and then wait for either an ends trade moment where you get that fair value gap after the dust settles, and then continue with the direction in which the market should be moving. Which direction it tells you it's going to move. So if we kind of miss and it's good for the market and we start pushing up higher, then I would wait for that ends trade moment where, you can get in and continue to a predetermined mark. So evening, Josh. Welcome, my man. And that was on the NQ, but it's going to be similar. The movement is going to be similar on the ES as well. Jesus. There we go. Bouncing right off that structure there, right off that trend line, pushing above the 21 again. Kind of tightening up right here, getting closer to the news. Watch and see how we react right in here. This is oil. Let me look at silver again for you. Jenny. Yeah, pretty moot. It'll probably have a pretty good jump too. Let's see. Push up here. What is the dollar doing? Pushing down. Okay. So just kind of like gold, it's opposite really of what the dollar is doing. Dollar seems to be pushing down, but are we trying to price in, the what is a possibility with the news numbers coming out? Are we dropping so then we pop and it's really just going to make up these losses and a little bit more, So let me put a line right here. Dollar. CPI could have a candle like that because this is a fairly small range, right? And the CPI could give us a move up into that buy side, which is also here too. And then, if that's the case, see how the dollar's dropping pretty good, but this is being very stagnant. Same way with gold. Gold's actually moving pretty good with the dollar. Well, I mean, this is a pretty choppy move to the upside. Some order block here. The structure behind it. Yeah, I'd want to see what it does right in this area. We zoom out on gold. We're right here, these OTE areas. We've been falling pretty good. So obviously, if numbers are good for the dollar, the gold is going to continue to fall. If it's not good for the dollar, then we'll get a pretty good pop. And we've got some liquidity right here that if we do get a pop, I mean, we could probably see Monday highs today. This weekly, probably get back into the premium of this range, that range. So, and that would be similar for silver. We get bad numbers for the dollar, then silver could probably come back up into this median to weekly high area. I definitely don't think I would be shorting unless we broke lower. You in the 15-minute chart. Because, I mean, we've built up a lot of liquidity right in here. So unless price breaks lower, I think we go higher, right? I think that might do it for me this morning. Get these kids ready and prepare for the school day. Again, I will try and look at CPI this morning. I start getting kids around that time, 7:30, 7:40 in the morning. So um, don't know if I'll be able to trade it, but we'll see. If not, then I will be looking at that the silver bullet between 10 and 11 because I will be at the charts or should have time to be at the charts during that time. I may have a meeting today, but we'll see. So, but either way, be careful with CPI news coming out today. Make sure that we just play smaller if you have to, and shoot for smaller targets. So don't try and hit a home run with it. Hey, y'all are welcome. Appreciate y'all being here, Jenny. Yes, hopefully we'll see you a bunch next week. That'll be awesome. Josh, man, appreciate you dropping in. Y'all have a good evening. Kyle, have a great day, and we'll see you. We'll see you next week.